So what are some common tax pitfalls that passive investors should avoid when they're investing in real estate syndications?
Um,
Well, I don't know if it's a pitfall, but I think that we see this a lot, and especially with our syndication clients, and you get investors coming back 2 months after the K1's issued. But just make sure that you are investing in the name slash entity slash ID number that you want to invest in, and that when you get a K1 that it shows reflects the same information that it's supposed to. It sounds like a silly thing, but it's one of those things that you see it gets overlooked so often that it is something worth mentioning for sure.
yeah. Yeah. So when you get your K1, take a look at it. Don't wait until October to open it up and realize, oh man, that should have been in my 401k's name. Somehow it should have been my name. Now I got to pay taxes on it. I think common, I don't know if that, again, it's not a pitfall. We have investors who invest in syndications, and when we're doing tax projections, they'll say, oh, I'm expecting $30,000 from this particular syndication. So help me factoring in how much taxes I have to pay. It's really important for investors to understand that when you get a distribution from the syndication, it does not automatically mean that is taxable income. Like we said earlier in our podcast, that frequently what happens is you'll get cash distributions, but on the tax return side for the K1, you might show tax losses. So this is something where you have the investors go back to the sponsor and say, okay, was this just distribution or was this some kind of a taxable event? So just getting an understanding that just because you got money distributed does not always translate into I have to pay taxes on this